Welcome to the advanced order types in our CFD and spread bet trading platform. Today we're going to cover all the advanced order types in our trading platform, from placing short orders, knowing the contingent orders inside and out, if dones, customizing order tickets and trailing stop losses. This is more so for people who've already gone through the basics and know the basics of the platform. This is simply going to cover the more advanced order types for those people who need it for their trading. Firstly, placing a short order is very similar just to placing a sell order. The only difference is we're starting without a position. So you would simply go to the depth screen, right click on the instrument, create the sell order. In this instance, we're going to go short 100 Vodafone on the London Stock Exchange. The price at the moment is 169.9, as you can see in the small market snapshot we've got at the top here. By creating a sell order, we're going to go a little bit below the market just to make sure we get filled. Now firstly you'll see it go into the order pad, the order will execute and it will pop up in our portfolio window. So we click sell, confirm the order, you'll see that straight away went active, it executed and we are now short 100 Vodafone. A short position in your portfolio window is always denoted by the negative volume. In our CFD and spread bet trading platform, our stop losses are usually referred to as contingent orders. Okay, so a contingent order is an order that will wait for a certain point in the market before it executes an order that will go to the actual market. In this case, I'm going to use it for a stop loss. It can also be used for breakout trading. I'll give you an example of both. So firstly, we've just gone short 100 Vodafone. So let's say we wanted to place a stop loss on this position. The best way to get a contingent order is either head up to the orders at the top and a contingent order pad. This will bring up a contingent order pad within your page here. You can simply click add to add a contingent order. Alternatively, most people will use the right click functionality on the position they hold and create a contingent order. This will mostly fill out all the details in the contingent order ticket for you, like the volume that you have and the instrument that you're trading in. In this case, the left hand side will point out what contingency you're waiting for or what point in the market you're waiting for before you fire off the action and the order on the right hand side. So in this case, we are short 100 Vodafone. So if we were to place a stop loss, we would wait for the market to reach a much higher price or a higher price, and then it would trigger an order to buy back our volume to exit the position. In this case, the way a contingent order works is firstly, we're going to leave it on fixed contingent order. There are some other options like if done, one cancels the other, and trailing stop losses. We will cover those a little bit later on. So we're going to leave it as a fixed contingent order to start with. Vodafone's already in there. I always use the last price to make sure it's actually traded at a certain price before it triggers. And in this case, because we're short, stop loss will then be above the current market price. So we do want either greater than or greater or equal to. Okay. Then we want to select the price at which we're waiting for a trigger. So we enter that position at 169.95. So let's say our stop loss was at 175. You place the price in here. Then we move over to the action. So in this case, we want to buy it back. Because we're short, to exit the position, we're buying back. If you were long, you'd obviously be selling. Our account number is already there. Again, Vodafone's already there that we're trading. Little market snapshot and some other details like our margin. The volume we've got is 100. Now we can select a limit price to exit this. So when you're buying, the market tends to go up from the purchase price. So to stop slippage, if it's a fast moving market, you can increase this a little bit above your current price you've got to set the trigger. Alternatively, some people use the advanced tab and simply select at market so that when the order triggers at 175, it will simply buy your 100 Vodafone to make sure you exit at market. By clicking OK, it will ask for a small confirmation of what you're doing. By selecting yes, this order will now filter into your contingent order pad. I'm going to select all the active contingent orders here as a filter and select the account that we're on here. And then you can see here we've got an active contingent order in Vodafone as a stop loss. To amend that, we can simply right click and go down to amend contingent order or delete contingent order as we see fit. I'm going to delete that now and create what's called a one cancels the other order. This will simply enable us to put a stop loss and a take profit together so that when one's triggered, the other one is deleted. Again, I'm going to do this by right clicking on our position in the portfolio window and creating a contingent order. From here, what we do is we now want to go up to destination and select an OCO order, as you can see in the middle there. Obviously, again, standing for one cancels the other. Over on the left-hand side, you'll see the tree. that will show you the layout of the order that you're trying to create. The reason that's there is also for when you're doing if-dones and so forth, and if you want to attach multiple contingent orders to certain legs, it will simply split these legs up and show you all the different levels of the orders that you've got. So now, firstly, we want to click on an empty contingent order there. The top leg here just denotes what it is you're doing, which is an OCO. It's going to default to fixed contingent order, which is exactly what we want. So in this case, we've got to enter our stock again, which is Vodafone. Our last traded price is again what we're going to leave it at. Let's start with a stop loss again. So it's going to be greater than or equal to, because we're waiting for the market to rise, because we're putting a stop loss around our short position. The price, well, let's go the same thing again. We're going to go at 175, and we're going to let that trigger and then sell and then buy our 100 at market. Okay, so we make sure everything's right. Last, greater than or equal to 175. At that point, we want to buy 100 Vodafone at market. Once this is done, we now need to get our second leg, which is going to be our take profit. So our take profit is going to currently be below the market, okay, because we're short. So Vodafone is what we're trading in. Last price, we're going to leave exactly the same again. This time, instead of a greater than, because we're not waiting for the market to go higher than a certain price, we're waiting for it to go lower than a certain price. So we're going to go less than or equal to. In this case, we entered the position at 169.95 or thereabouts. So our take profit is going to be at 160. Again, we're buying back because we're short. Always remember that. Our volume is 100 that we hold. And again, we can do that at market just to make sure that we exit the position. Therefore, you can see we've set up both legs of the stop loss here and the take profit. And now we simply click OK to confirm this. Yes, we want to submit this order. Again, once we've submitted that order, it will come down into our contingent order pad here. The contingent order pad, as mentioned before, is retrieved from the orders drop down at the top here. Okay, now you can see the top leg is saying that we've got an OCO, and then the two contingent orders are fixed just below that. So one is our take profit at 160, and the other one is our stop loss at 175. You can see there, if we minimize that, we can bring it back down into one single line. It's just in case you've got quite a few orders. Okay, but you can see there, it would denote that it's a Vodafone OCO order on the London Stock Exchange, and it's still active. Okay, we're going to amend this order so that it triggers, just so I can show you how once one of the leg of the order triggers, the other one will automatically delete. So we're going to right click and amend the contingent order. Once the contingent order is up, I'm going to amend simply the stop loss side just so that it triggers. Now it's currently trading, as you can see over here, at around 169.8. So if our stop loss, we wanted to trigger at anything above 169, and then we're going to buy at market, then you'll find that our take profit will now delete. So we're going to click OK. This specifically is going to execute at market now because the price is currently above 169 where we've set our contingent order trigger. So I'm going to select yes. You'll see here, it will quickly activate within the orders contingent order pad. You saw it go into the order pad into market, straight away bought us back 100 Vodafone. Our current position size is nil, which means we have exited that position. If we go to our triggered orders here, you'll see that our Vodafone here, one was triggered because it reached a greater or equal to 169 in the market, and therefore you can see it's completely deleted the other leg of that order for you. Contingent orders are great for breakout trades as well. So a breakout trade is for people who wait potentially for an instrument to break a support or resistance point before they enter the market. Now, a normal limit order cannot be used in this circumstance because let's say we're waiting for the market to break a support line. If we did that, then we'd have to put in a sell order well below the current market and it would trigger straight away. So again, by creating a contingent order, you'll see that what we would do is we would wait for the last price of Vodafone, in this instance again, to reach a price less than or equal to, because it's going to be below the current market. And let's say our support line, Vodafone's trading at 169, let's say it was 160, we could say 160, then we want to sell at market because we're going to go short. We want it to trigger as a market order, and we want to go short 100. So this order here simply would now wait for the market to go below 160, then it's going to sell 100. We're going to hopefully capture the movement once it breaks through that support line. Again, we click OK and confirm the order. It will simply populate our contingent order pad, and now we've got a breakout trade in place. Keeping in mind, contingent orders are brilliant for this as they don't chew any initial margin because there's no active order in the market. Now, we're not going to actually let this trigger. We're going to right click on it, delete the contingent order, and you'll see it exit the order pad straight away. Most people do like to attach a take profit or a stop loss from their initial order pad. To do this, you simply head to a standard order pad and we're going to have to customize it first. So let's say we wanted to buy Vodafone and attach a stop loss or a take profit, or in this case we can even do both. What we have to do is we have to amend our order ticket firstly. There's a little toolbar or an options toolbar, it says configure order panel, the bottom right hand side. If we left click on this, it will bring up our order panel configuration. Now we want to select the default on the left hand side, and you'll see that the if done section in the middle here doesn't have a white dot next to it. By left clicking in that box, it will add the if done section, and we select OK, and you'll see right in the middle here of the order ticket, it has added for us the if done section. Okay, so in this case, we can have a stop loss or a take profit trigger. Now, what we want to do here is simply create the initial limit order or the market order that we're going to put in, and if that triggered, we can then attach our stop loss take profit. So in this case, we wanted to buy 100 Vodafone at market, and then once this is done, let's say we wanted to buy at 169.55. Once this gets done, we now want to, let's say, activate a stop loss. So in this case, by activating a stop loss, we simply can then select how many points away or the exact price that we want the stop loss to trigger. Now, in this instance, what we want to do, if we selected points, let's say it was 10 points away, it will automatically adjust the price for you. Alternatively, if we adjust the price, let's say to 10, it will actually adjust the points for you. Again, with our stop loss limit, this is to avoid slippage, we can go up market or at limit, and that will sort that out for you. I tend to go up market just to make sure we get filled. So this would create a stop loss and attach it to our initial if done order. So if this went into market and triggered, it would create that stop loss for us. If we want to do an OCO, you simply left click and tick the take profit trigger as well. Same thing again, if we're on price, we select the price, we want our take profit. Let's say it was at 170, it works out the points for you, and we want to go at market. Now by selecting OK, it will create a limit order for us, confirm that order. We can see the limit order here is created, and there is an if done in our contingent order pad here functionality, so that when that triggers, the if done will then trigger, as we saw previously, take profit stop loss. Whereas one of those gets triggered, the other one will get deleted for you. Let's just delete that for now. And you see that it deleted the original order and the if done functionality we had on the left hand side. Another if done functionality that people like is for that breakout trade, and then they want to attach an OCO around that. So the first thing we have to do is now create a contingent order again. So right click, create a contingent order. I'm just using Vodafone in this instance, just to keep it simple. This functionality is available across all FP Markets products on spread betting and CFDs. Firstly, we want to create an if done. So go to destination in the middle of your contingent order pad, order ticket I should say, and select if done. Now the first leg of the if done we're going to do is going to be a standard contingent order, so a fixed contingent order. An auto desk is simply a normal limit order, just like we created from the order ticket just previously, just in a little different, a slightly different format. So we don't want to go in at market, we want an if done breakout trade, let's say, and attach to that a contingent order, stop loss and take profit, so an OCO on top of our original contingent order that might be used for breakout, or some people simply don't want to chew up margin, and so therefore, let's say they were waiting for a price to peak or a price to slump, and then maybe pick it up at the bottom and bottom feed, or maybe pick it up at the top and short sell and hopefully capture a small retracement in the market. This is another way of doing it without chewing up margin or exchanges purging your orders at the end of the day. So in this case, again, original contingent order. Let's trade in Vodafone again, .LSC. I'm going to say in this case, we're going to wait for Vodafone to come right down to a much lower price, and at that price, I want to buy some Vodafone, but select a very close stop loss, take profit, so that I don't risk too much. In this case, we're going to wait for Vodafone to reach a last price less than or equal to, well below the current market. Our current market, as we can see over here, is at 169.7, 169.75. Let's say we wanted to wait for it to get all the way down to 145. At that price, we're willing to buy to hopefully capture a bit of a retracement, buy 100. I'm going to make sure I get filled. Some people do like to set a limit because if they don't get filled at that limit, they're not willing. and also depending on the size of your position as to whether you really want to go up market, because you can move market prices. In this case, we've already set now the original of the orders. Now we want to go to the second leg, and around this original contingent order that we've set, we're going to create a one cancels the other. Now you can see in our order tree on the left, it's then created as two more legs as an OCO attached to our if done contingent order. To start this off, we're going to put in a take profit, so we need to select the first leg of our OCO. Once we've selected that, again, we're trading in Vodafone, and take profit here is going to go above the current market. Because we're buying at the bottom, so we want a last price, we want greater than, we're going to buy hopefully, as we mentioned, at 145, so we're going to put a tight take profit at 150. We're going to sell this time, keeping in mind, because we are going to be long. So we're going to sell our 100. Again, I like to go up market just to make sure I get filled. Otherwise, select your limit slightly below the current trigger price that you set, just to make sure the volume on the bid is enough to cover your order. Now we want to go and set the stop loss. In this case, again, we're in Vodafone, which is fine. We want a last price is going to be less than, okay, because it's below the current market. So less than or equal to is fine. We're going to get in at 145, but if it gets to 140, I really want to exit my position. So we're selling again. Select our volume, 100, because that's what we're going to purchase in the first place. I'm going to select that market. And you can now see on the left-hand side, we've got the original if done. We've got our fixed contingent order for our OCO, as you can see. And once we confirm that, we select OK. This is going to fill into our order pad. So you can only see the if done there because it hasn't actually triggered the original order yet. Once the original order is triggered, then you'll see the OCO order fill in. But at the moment, it's just got your original contingent order where if it gets down to a last price less than or equal to 145, we're buying 100. Okay. Once that triggers in the contingent order pad, you'll then see the OCO fill out. So you'll see a two-legged order get attached to this in a similar fashion to what it was in the order ticket. And then once one leg, stop loss, or the take profit gets triggered, it will then cancel the other. So that's how you set up an if done contingent order with an OCO attached to it. Lastly, trailing stop losses have become quite popular amongst most traders, as it will automatically move your stop loss up with the position you might have, saving you to have to adjust your stop loss and actually hopefully eventually turn it into what's going to be a take profit, just so you don't miss a good run on a position you might have. The trailing stop will follow up your position by a set distance that you specify, whether it be as a percentage or as a price. As it follows that position up, or I should say in your favor, because it can also trail in a downwards direction. And then once that gap that you specify is breached because the position turns around on you and retraces, once it breaches that gap, it will exit you at a specified price or at market. To do this, again, we want to right click and create a contingent order. Instead of selecting fixed contingent order, if you click on the drop down menu under destination, you'll see trailing contingent order at the bottom. By selecting this, again, it's very, very similar to a contingent order, but in this case, it's a trailing contingent order rather than a fixed contingent order. So on the left-hand side is the strategy again as to how we want to trail the current market, and on the right-hand side is the action we want to pursue once our gap has been breached. In this case, again, we're going to use Vodafone. It's going to trail the price always by last in the case of a trailing stop loss. There's no other options. Now the trailing type entirely depends on you as a trader. Most people will do it by price simply because it is fixed, whereas percentage can obviously change depending on whether the instrument has a large trading price or a much smaller trading price, where a tick can actually vary in percentage size. So most people do by price, some can do by percentage, entirely up to yourself. In this case, I'm just going to use price. Now the trailing direction is above the base price or below the base price. So if we're trailing a long position, we want to go below the base price is where we want it to trigger. If it's a short position that we're in, we want to trail above the base price. So let's say we're below, for example, in this case. Now our offset is the distance we want. It's always going to enter the trailing stop based on the current market price. So the distance you set now will be the distance from where it's currently trading at. So you always keep your eye on this last price over here and pick the distance you want. Also obviously based on maybe the price you entered the position at. So if we wanted to trail Vodafone by 10p, we'd select 10. In this case, then over on the right hand side, if we were below the base price and we were following it up, we'd want to sell the position that we're currently in. Let's say we held 100, we'd select 100. and then obviously have it at market, which is the only option you've got for a trailing stop loss. So we'll leave it at market so that once we're going to trail the current price of Vodafone by 10p, as it trails up, as Vodafone moves in a positive direction, this stop loss will follow Vodafone tick by tick as it moves until Vodafone turns around and retraces that gap which was selected of 10p. So as soon as Vodafone comes back down 10p or more, it's going to trigger your sell. If Vodafone comes back a couple of p but then keeps moving in a positive direction, it will always maintain that gap of 10p until obviously it retraces more than the 10p, where your order will get triggered. So simply select OK and confirm your order as yes, and that will go down into your contingent order pad here and show you've got a trailing contingent order to sell 100 once it breaches that gap of 10p. I hope this has helped further your education via our CFD and spread bet platform. Keeping in mind the functionality in the spread bet and the CFD platform exactly the same, being direct market access, you see exactly the same markets and so forth. The only thing that will vary amongst different products that you're trading is usually the security code that you use. Okay, so I use Vodafone throughout most of that, but you can simply replace that with Euro, US dollar. You can replace that with any of your futures contracts, your indexes, commodities, etc. If there are any questions or queries, don't hesitate to contact any of the sales desk. They'll be more than happy to help you out.